Hello and welcome everybody to the Majors Monday. Today we're gonna cover, as the name says, the majors. I have to use TradingView on my web browser because the app is not working like it should. And I even reinstalled it and everything, so I'm gonna use the web browser. Pretty much the same, some small differences, but I think I will be able to pull it off. So first, BTC, I wrote about it in the written update as well. We are going for, it seems like we're going for the daily one here, and we have some minor ones here, but the whole idea is just to fill this FVG. I see all of my, oh my God, what's that? Go away, please. Something from the white belt, I guess. Text, and goodbye. We are in higher time frame premium in price discovery. So I'd argue that being a seller here is way better than being a buyer here from a higher time frame perspective. Also like a 3-year bull run, if the 4-year cycles play like they usually do, we are close to a top. And so I'm willing to round trip also a good chunk of this upper trade here, simply because I want to be a seller up here. To me, it's similar than to buy down here. So everybody would agree that buying BTC down here was probably a very good idea. And so I say selling up here is a good idea for the next month looking forward. And as a swing trader, I obviously want to build positions that last for several weeks to months, which I can then drain over a longer period of time on significant size. So as said, I see selling BTC here as buying it for around 20K. And this is exactly what I do. Obviously with invalidation, I'm not a gambler. I always have an invalidation. I define my risk. And this is what I do here. I play it quite wide, so probably you will see many people playing it way tighter. But as said, to me, this is an optimal area to be a seller. And so I'm playing it wide and giving it more room to breathe. And in the end, it's about size anyway, because if I play it tight on lower size, or if I play it wide on bigger size, in the end, the money that will come from this trade is pretty much the same. And having it wider is a pretty simple way to, making the game a bit easier, giving your trades more room, giving yourself more time. And I can still invalidate the trade if I see something I don't like, and I can invalidate it early, not even paying the full stop or stuff like that. So power of position management, power of scaling. If you're interested, I'm sharing all of my setups in real time with scaling, how much risk I take and all that in the Discord. This is pretty much what the Discord sub is about. And other than that, we have ETH also going up 2% actually today. So nice, crypto starts moving again. So for me, a swing trader, there will be tradable setups. Similar story than on BTC, just that I don't have a real limit order here because I would like to see them hit together. But I think like there's a 23-hour or something, and I mean the supply obviously created a big sell-off. So I'd argue that there are still big sellers sitting up here, and I will decide if I want to enter here or not once the level approaches. Looking at majors, we might get some more confluence for that. We have stable CD level, daily level here will be nice confluence for the short. We also took out this high here. We have no more history, but I've drawn out the levels. This is the swing high. We have some major levels up here. But as I said before, last week and the weeks before as well, a pullback, or better like a pump on the normal coins makes sense here, simply because a lot of people probably got forced to sell. And so they're now forced, but you know what I mean. People will probably FOMO back in on this little pump. And we have a similar level pretty much everywhere. And it's not about like hitting this level to perfection, but filling this FVG, maybe overshooting a little bit, is perfect confluence for my short idea. Yeah, we have also here created an internal higher high. So something I would definitely not neglect, or like It's not a major higher high, especially like zooming out, it's still a lower high, right? We are compressing into this here, and now the question remains, will this go higher from here? Will this go lower? We have a best case target here, but we have also levels up here. So in the end, it's probabilities. And another big thing you need to think about, in my view, is that this is a dominance chart, and 3.3% tether does not necessarily imply a big pump for altcoins, right? So the money could also flow in USDC. So just imagine tether is depegging or something like that. It will probably not be as great for altcoins, and it will probably be bearish for this chart, because then the tether loses market share, right? And probably a lot of it flows to USDC. And so be aware that how dominance charts work, and that they are not necessarily imply that something needs to happen, like best case target here doesn't need to mean all this money flows into altcoins. Could be, and for now, like the data we have showed that every time Tether nukes, the other coins are going up pretty much. But this does not imply that it's always going to happen that way, so stay flexible. At the market, many things can happen. We have a similar situation, or a good example on BTCD. We reacted from this little demand here. We have another one here. And once we broke this trend line, I said, okay, good, this is probably going a bit higher. I did not expect this big crazy wick, but we have seen this before, like a big wick in BTCD, you see here, in February of 22. If you remember, this was not very bullish for altcoins, and it was also not very bullish for Bitcoin. And so if BTCD is going up, this does not imply that BTC needs to go up as well. BTCD going up just means BTC getting a bigger share of the pie, or bigger share of the whole market. And in this case, it just went less down than altcoins, which is bullish compared to altcoins, but it's not bullish in sense of like BTC against the US dollar. So keep that in mind, and keep that in mind for Tether as well. I think that's important stuff. Understand what these charts are made of. Do not just look at them and say, oh yeah, there's a nice little block, but understand why this chart is doing what it's doing, right? Understand like the market mechanics behind it. ETH dominance is breaking out from here, which is nice to see. So maybe this high is now in play, and maybe even the most like the best case target, which I would say is a best case target. But with this breakout, and if we then also able to take the horizontals here, I'd say that the range high here becomes more likely, and we will see. Time will tell. Similar story on ETH BTC. We are breaking out here, and this is exactly what we want to see if we are bullish altcoins. And so this is now bullish altcoins, right? This does not mean biggest alt season of all time is around the corner, but it implies that ETH is gaining strength against BTC, but we take it level by level, and the first levels are still those highs internally and the swing high here. But I guess if you go for the swing high, it makes perfect sense to wick above and take this level, fill all of those gaps here. Time will tell. Would be a strong move for ETH, and as I said before, looking back at ETH, oh, that's the Euro chart. Looking back at ETH as well. So this is probably not the greatest confluence for the short. This is why also I'm not having a limit order here, and I'm thinking about not even taking this trade. And like this pump for ETH BTC could easily lead us to ETH breaking 5K, and from a liquidity perspective, it will make perfect sense to smash 5K, because a lot of people say, oh yeah, that's so bullish, psychological level, blah, blah. But in the end, it doesn't mean anything. We trade charts, right? It's not about the psychological levels, but psychological levels create liquidity, because people look at them. People that don't look at charts or anything, they look at psychological round numbers and they say, wow, it's breaking 5K. And we know that this is just creating liquidity, but not in the way the majority expects. So as said, breakout here, might be time for some moves. B-wall going higher from here, as I said before, inflection points usually at the range high or at the range low. We spend a lot of time here. BTC is at all-time high, and this chart started to react. Usually a sign of a change of trend, change of character. or a change in program, better said, on higher time frame change in program. And we were in buy program for 3 years. So as said, this basically adds confidence to my BTC short idea. But this does not mean like only that because I'm like bearish BTC from here on, does not mean altcoins could not rip one more time. Yeah, people doing what it's always doing. It comes back to the support. We have no volatility on the way down almost. And then once it starts reacting, we have a move. Also evol at the support. Was talking about this last week as well, I think. And this means basically also the same like b-ball. It's just moving a little bit slower. So a big move for Ether could be around the corner. Total back at the internal swing high. Probably filling this. Could add confluence for the short idea on BTC. Similar story here. The level reacted already, provided a solid reaction. Now the question is, what will we do? This remains supply until it's not. It could refine it down to blocks, to hidden stuff, whatever. But if we like go back up here, I would not expect like a clean just slice through. And as I said before, we have an internal break of structure. Now this remains the best case target until it's not. So as always, it's a trend, a range until it's not. Similar story here. As said, supply, break of structure to the downside internally, not the higher time frame trend is not broken, but at the same time with this internal break of structure, I would be bearish here if I would still be very long altcoins. And yeah, similar story in total 3 as well. And I have another interesting chart I wanted to share today, because majors are not just crypto majors, right? So the markets are interconnected at all times. We have, this is the economist clock, and we have here again, we have something global here. It's November, we're going into November, 2 arrows pointing down. Usually this clock was pretty much on point. Obviously it leaves a lot of like room for interpretation, right? But at the same time, looking back, and if you compare it to the pictures, it all made sense. So for example, in October, we had this nuclear eye. So I thought it's all eyes on nuclear, and if I look at my nuclear stock portfolio, it pretty much played like I thought it would. Now it's going for November. We have the yen here, we have a planet here, we have arrows pointing down. And so I looked at the Japanese yen, and I found the Japanese yen strength index, which has not as much history. It started in 2007 and it ripped into 2011, 2012, and ever since it's in a downtrend. And now the question remains, what will happen? I don't know if you're familiar with the yen carry trade, but it simply meant that Japanese interest rates were at record lows ever since like the early 2000s. And I mean, they were even negative at some times. We can also pull up the interest rate chart real quick. By the way, if you don't know that, we have this little global, this little earth here, and you can open it and you have a macro map, and this is pretty much the best map I have found so far about macroeconomic data. You can choose any point in time. If there is data available, you can just then click on the country, see the interest rate, open it on super charts, and you immediately have the chart open, and this is for inflation rate, unemployment, blah, blah. So very nice stuff. TradingView is pretty much the only tool you really need. You have also the economic calendar, by the way, if you talk about this. I think nobody needs to look at anything else but TradingView. And you see interesting stuff here. We had, since pretty much 99, we had 0 interest rates. We even went negative. And negative interest rates mean if you save your money to the bank, you pay something for that. And if you take a loan, basically you get paid, or you get the money for free, more or less. And so a lot of people like took loans and took money in the Japanese yen. And the carry trade is nothing else but people taking like the free money, the free yen, and buying assets with that, like US assets or whatever. And you see, we had a pump in interest rates like in 2023. And this was unfolding as the Japanese carry trade. And if you look at, for example, the SPX in comparison, SPX here, we have the Japanese carry trade was this little pullback here in July of 24. Simply because if interest rates are going higher, people need to cover their positions, need to sell, are forced to sell, because at some point, I mean, the stock market is a risk, right? So it's not a like risk-free market, and those traders or those people who bought like stocks with free money, once the interest rates go up, they need to pay interest on those loans, and then obviously this whole thing unwinds once they take profits, and this could lead to a cascade. And if you look then at the Japanese interest rates again, it's at 0.5, so it's not even high, right? And we have seen this level before, and the last interest rate hike was in 2006. Into 2008 wasn't as bullish for the global markets, for the US market. Doesn't need to be a correlation here, but at the same time, yeah, we are at the same level. And in my view, the question is now, will they push interest rates higher simply because they don't want to devalue the yen even more? They sometimes need to do that, obviously. And if they push it higher from here, this could be a bad thing for the global markets. And obviously, if this is just like rolling over, they start cutting again, or it's going sideways or whatever, it could also just be a nothing burger. But I came to the whole analysis, or I thought about this for a little, just simply because the economist clock, and as said, we have the yen here, we have something global here. Q4 on this whole clock doesn't really look bullish, does it? And so I think this could be very important in the not so distant future. And another thing is, should we break this to the downside, the yen is obviously losing more and more strength against anything, and this would probably imply that the Federal Bank of Japan is cutting rates, and if this is going higher, they're probably increasing rates, and then the yen could see significant outperformance against other currencies. So if you look to hold your buying power in different global currencies, the yen might be interesting should we like break this downtrend and go higher from here. But we take it level by level. It's a nice idea. It seems to make sense, but we trade level to level and we don't trade bias. But I wanted to show this today because I think it could be very obvious in hindsight. When everybody says, yeah, this was obvious, we had the clock, we had everything, but nobody's talking about it, so I thought it's maybe worth spending a few minutes talking about it. And what's also worth talking about, in my view, is the study area of the Discord, because the whole study area is free, basically, and pretty much everything you need in the market, market mechanics, essential knowledge, everything, risk to reward, mental game basics, everything I collected over the years, all my posts and everything I did so far are structured in the Discord, and you can just access for free. And so if you're still looking for nice information or a great overview, because on X things can be very messy. Over the years I collected a lot of posts, they're not very structured, you will find some here and there, but in the Discord here you find everything I've collected over the years, and that is publicly available anyway, and some extras structured on the Discord. So make sure to check it out. As said, it's for free. And that said, I wish everybody a great week ahead and enjoy your time. All the best. Bye bye.